So we can start with regulatory clinic, and I'm going to call on the chairman of the organizing committee to just speak to us about what the regulatory clinic is all about, and then we go on to the next item on the agenda. So please, ladies and gentlemen, let's make welcome Mr. Tolu Aderemi.
Thank you very much, Chinas and Millicent. A very good morning, Your Excellencies, distinguished guests, ladies and gentlemen. First, let me thank those of you that joined us at the chairman's dinner last night. And I also want to congratulate all of the awardees of the chairman's dinner of last night. Today is the penultimate day to the last day of the conference, and I'm grateful to all the 17,000 lawyers of the Lagos Bar for the support so far. This morning, we're going to be going straight into a very important session on the reforms of the foreign exchange market in Nigeria. Only last night, we heard about the boom in the health sector as a result of the FX reforms. We're looking forward to the consequences of that and how that can be multiplied in other sectors. And I'm delighted all our speakers are here this morning. Whilst that session is going on, we're going to be having simultaneously what we refer to as the clinic and policy dialogues. And what does that mean? As lawyers, about 50% of our assignment requires that we deal constantly with ministries, departments, and agencies of government. The return timeline or the outcome of our engagement with these MDAs sometimes defines the quality of our work, which should or sometimes should not be. But what we have found as lawyers, whether commercial lawyers or straight-line barristers, is that there might be a communication problem. And you know, with communication, when there's no good feedback, then there's going to be a problem. That problem, we want to attempt to solve it this morning. And to solving that problem, we have invited about 6 MDAs. So we have the Lagos State Lands Bureau, they are here. We want to discuss all issues relating to registration of titles of lands, etc., and what the challenges are. We want to discuss with the Corporate Affairs Commission their challenges relating to sometimes multiple registration of companies and the likes. So CAC is going to be joining us this morning. I'm delighted to know that the Lagos Lands Bureau, they are here already waiting to attend to some of us. The probate registry of the Lagos High Court, they are also going to be here to deal with matters. Many of you may be aware that the Lagos High Court was burned down as part of the consequences of the NSAS. And so many of the wills will appear to have also gone with that incident. And so we're required to resubmit the will. But in doing that, you're also required to bring an affidavit from one of the beneficiaries. We find that to be preposterous because the beneficiary is not expected to even know that is a beneficiary until that will is read. Sadly, that is what the procedure is. And so those are some of the issues we will be taking up with that probate registry. The Economic and Financial Crimes Commission will also be taking a table behind as part of our regulatory clinic. We're supposed to complement each other and not to compete with each other. The chairman of the commission was here on Monday delivering his keynote paper through one of his representatives, and he expressed in no uncertain terms their concern with the conduct of some of my colleagues. We want to also give them a feedback of what or how we perceive their conduct, whether ethical or otherwise. So the EFCC will also be joining us at the back this morning. The Federal Competition and Consumer Protection Commission, FCCPC, they will also be joining us, ditto for the Securities and Exchange Commission. This exercise will be going on simultaneously, and we can assure you there's not going to be any noise interruption whilst the FX session is going on. Otherwise, I want to thank all of you once again, and I hope that you enjoy the remaining power-packed sessions we have for the rest of the day. Thank you very much.
Thank you, Mr. Tolu Aderemi. I think he deserves a better round of applause, please. Thank you very much. I'm going to call on the coordinator for the Public Sector Dialogue Foreign Exchange Market, in the person of Mr. Abisoye Koka. He is the Managing Director of Kia Finance. Sir, please, you can come up to the stage. While he comes up, please, let's give him a round of applause. Thank you very much. Thank you.
Thank you. Good morning, everyone. As we gather for this critical conversation around Nigeria's FX policy reforms, I'm reminded of President Bola Ahmed Tinubu's inauguration speech, where he boldly declared that the floating of the naira as part of a larger economic reset was extant. That singular act marked the beginning of the renewed hope mandate, a signal of Nigeria's readiness to confront inefficiencies and embrace a more transparent and market-led economy. Since then, the Central Bank of Nigeria has taken decisive steps, from unifying exchange rate windows to the adoption of the electronic FX matching system and the issuance of the Nigerian FX Market Conduct Code, all with the goal of stabilizing the naira, attracting foreign capital, and strengthening macroeconomic fundamentals. But as we know, the journey is far from over. While a flicker of light now glows at the end of a very deep, my emphasis deep, tunnel, the road ahead demands more clarity, more courage, and most importantly, more collaboration. That is why conversations like this matter. At Kia Finance, we believe in the power of forums like these, where policy is demystified, private sector voices are heard, and institutional understanding deepens. It is at the heart of our mission to build trust in the financial ecosystem, and we remain committed to supporting and convening dialogues of this nature. Let today's session not only serve as a platform for reflection, but also spark a continued engagement, shared responsibility, and collective action. Indeed, Nigeria will be great again. Thank you, and let's get into this. I will be calling up Mr. Oke Ubeano, who is representing Mr. Malam Mohammed Sani Abdullahi, the DG Economic Policy of the Central Bank of Nigeria. He will be here to give remarks to spark and start the conversations around this forum. Mr. Oke, thank you very much, and please come on.
Good morning. Um, I would like to thank the organizers of this event for, inviting the central bank to, say its part. It's not all the time Nigerians allow us to explain some of these things. Because Nigeria is a country where citizens are fixated on the currency. So people make up their minds about what we are doing, and most times abuse us based on what they have made up their minds about. So thank you, MBA Lagos, for inviting us. And I bring greetings from the Deputy Governor Economic Policy, under whose charge things around FX policy are. And I come from the Financial Markets Department, and I'm directly responsible for managing the currency and policy around the currency, implementing policy around the currency. So I was given 5 minutes to just talk about the reforms. So I'll just go straight to it. We all know where we are coming from. Sometime before the new leadership of the central bank took over, we know we at some point had about 6 different exchange rates. We all remember we had an I&E exchange rate, we had a Hajj exchange rate, we had an agriculture exchange rate, we had all kinds of exchange rates, 6 or so exchange rates. And what that did was that it made room for rent seeking. It made room for arbitrage. You remember when Emir Sanusi said that if you had connections, as we say in Nigeria, you could buy at a particular amount and sell and make ₦1 billion without raising a finger. So that was the system we had. That system meant that we didn't have a price discovery around our currency, and people could arbitrage it based on who they knew. So that was bad for us. And what it did was it made investors from out of here wary of our markets, because nobody knew what exchange rate he was going to get. It led to capital flight, and it led to our reserves falling. We also saw our reserves going down in a way that wasn't sustainable. So it was important when the new management of central bank came to introduce these reforms. The first one was that all those different exchange rates were collapsed into one. So today we have one exchange rate that everybody, transacts at. We have an exchange rate that you can see on the streets, which is really not in the control of the central bank, but an exchange rate that the central bank, the official rate that the central bank controls. However, the central bank is very aware of that exchange rate on the street, and has also worked to make sure that there's a convergence. If you notice, sometime this year, there was even a time it was exactly the same, or the BDC was even, more expensive, And now, today, it's about 50 naira or so. But our aim is for us to have one rate. And I must tell you that it's the same in every country. There's no country you go to that the rates you buy on the street is the same as what you buy officially. So ours is not bad. And if you look at the 50 naira vis-a-vis 1,005, you see that it's within a very manageable range. So not bad, but it's something we also look out for. So we needed to unify the exchange rate, and that's what we have done. We also, because of what happened in the past, we had some backlogs. You remember that some airlines left us because we couldn't pay, we couldn't give them USD for the naira they had collected from us for our travels. So some airlines stopped operating, some took us to IATA, some did all kinds of things. So we had to clear that backlog. And not just airlines. I use airlines because all of us know about airlines. But there were so many other people who did business with us whom we couldn't pay. They had the naira, but we couldn't provide them with the USD. In fact, I went for one meeting. I used to be at the SEC, so I know a few of the people we have worked with, and I know Oga here. And so we went for a meeting where we were supposed to go and speak to investors. So at that meeting abroad, they gave me a table and said, this is a Nigerian table. So during lunch, people are going to spend 1 hour asking you about the Nigerian market. So it was and I looked at they had an Egyptian table, it was an Africa emerging market thing, Algeria, South Africa. And then I looked at my own, it was the longest. Others were just, the next biggest was half my own. And they said, sit at the top of the table. And then I sat there, and before you know, the table was full, and people were standing around. And I looked at the other tables, nobody. And then everybody was asking me, my money is stuck in Nigeria. My money, this one said 10 months. This one said 5 months. I said, I'm from the SEC. I'm not from, they said, well, how do we get our money out? So it was a serious thing. You know, when I came back, I sent a message to the central bank. I said, you people have to be going for this meeting. No, may not see waiting they happen. You know? So, but that is a thing of the past. It's been cleared. The other one was that we needed to boost FX liquidity. So if you notice, we are working on remittances. I must tell you, you all know how oil has gone. I don't know whether there are some oil people here, but we don't know how that oil thing works. Okay, so we have taken our eyes away from it. So, and if you notice, we've been making some efforts at remittances. We have a target presently for $1 billion every month coming in through our IMTOs. We've even registered a few more IMTOs. We've enabled that part of it to work. So we're making it easy for Nigerians to remit money. If you notice, we've set up BVN for the foreign, for our brothers and sisters who are abroad, just making it easy for them to remit money here. So that's a way to increase our liquidity. That's another reform we did. We also did something in BDCs recently. You know, we have changed the regulatory environment around BDCs just to make them more efficient. We introduced an electronic matching system. So on our market now, our market is very transparent. What it means is that if I log on, if an authorized dealer logs onto our platform, the dealer can trade without having to call anybody or know anybody or, you know, or have any side thing. That way, we're able to discover the real value of the currency. So we have price discovery, we have transparency, and that is working. The other thing we did was that we introduced a code of conduct for the market. That was launched early this year. Every authorized dealer bank had to sign up to that code. And we made the execution to be at the very top. The chairman of the bank had to sign, the CEO had to sign, the treasurer had to sign. And we've really started, enforcing that code. So I can happily tell you that everybody is, abiding by the code, sticking with the code, and everybody is behaving him or herself in the market. So that's another thing we did. So all these reforms, 6 of them packaged in one, are why you have the stability you have seen in the currency. I know some of us want it to be 700 or 1,000, but what is important is the stability. If you notice, for months, it's been at a particular range, and that's what we want. In terms of the strength, we all have to contribute to that. I tell people the central bank doesn't produce anything, doesn't make any money. So it is what you produce that will strengthen our currency. It is your demand for foreign goods that will weaken our currency. So it's us that have to work on that one. But what the central bank does or should do is to make it stable so that you can actually say, oh, tomorrow I'm going to buy this thing for $1, and you know that $1 is going to be a particular amount. Or you have bought something to sell, and you know that that amount for which you bought it will not change materially by the time you sell it. So those are the things that the central bank is supposed to do. So now we have a better landscape for our currency. Our currency is predictable. We are seeing a lot of interest from abroad. Foreign portfolio investors are coming in now because they can actually project what they will get because the currency is stable. We have stronger investor confidence now in our markets, and that's why you're seeing capital flowing into the country. In the past, you hear CBN intervened this month with $3 billion. CBN intervened this month with $2 billion. You don't hear those things again because we now allow the market to move. Not every central bank in the world intervenes at some point when there's volatility. but it's no longer CBN leading the way, and just supplying like that. We are now doing it the way every other central bank does it. And if you notice, our trade balance has improved. I'm sure you saw the last reports about our trade balance. It has seriously improved. We had a $6 billion surplus the last quarter. So that has improved. And general confidence has improved. And that's what we are seeing. And we are seeing recognition of it. We just got upgraded by Fitch and Moody's recently. Our bond ratings, our credit ratings just got upgraded. And however, we still have some challenges. The first one is supply. Like I told you now, we are getting almost nothing from oil. It used to be the mainstay of the FX. So that's why I'm asking if there are some oil guys there, maybe you can explain to us. So that's a problem. We also, this one is a constant problem, speculative attacks, from, people that act in the market, but that's our job to ensure that we keep things stable even with those kinds of activities. So generally, we're in good shape, and that's what I just came to let you know. We're in good shape as a country. Our currency is in good shape. The central bank still believes, we all believe that the currency is still undervalued. But gradually, we are going to get to that point where we'll get a market-determined real value for our currency. So thank you very much. I'll be seated there and wait for what you ask. Thank you.
Again, good afternoon, everyone, or good morning, everyone. So I'm going to set some rules before I call our panelists up. These are guidelines. Number one, the forum chair is free to give clarification to responses at any time by raising a hand. So, Mr. Oke, there'd be a mic close to you, and should you require clarification or should you want to give any clarification to the remarks of any of the panelists, please raise a hand. I would try to restrict my questions to 2 questions for each panelist. Co-panelists are to indicate if their response is to corroborate or to dissent to a panelist's opinion. Dissension shall not be intended to raise argument, but to engender a wider view of the issues discussed. 3, conversations of this nature are delicate, as no one in this room is unaffected, right from transporting yourselves to this event or to putting clothes on your back. The report around FX volatility and inflation is a haunting nightmare we all wish to wake up from. Therefore, I would demand decorum, as we're here to problem solve and not lay blame. The 4th, but not the last ground rule, as I may set some as we go along. Questions will be raised by audience, per audience segment. Please indicate if it's a comment or it is a question. 1 minute per question, and please indicate to whom you are addressing these questions to, particularly the panelists at the front. Now, to introduce our revered panelists. Let me start by introducing Dr. Ayo Teriba. He's an economist, and he is the CEO of Economic Associates. Mr. Teriba is a leading Nigerian economist and the Chief Executive of Economic Associates, where he directs economic research and advisory services focused on Nigeria's macroeconomic outlook, investment opportunities, and policy environment. Please make welcome Dr. Ayo Tereba. Also a panelist at today's forum is Alhaji Aminu Gwadabe, Chairman, Association of Bureau de Change Operators of Nigeria, ably represented by the Chairman of APCON Southwest. Please come forward, sir. Mr. Taiwo. Ogami, as I fondly call him. Another panelist at today's discussion is Mr. Ayodeji Adelagun. He's the Executive Director, Standard Chartered Bank, an accomplished financial markets professional with over 20 years of experience in trading, foreign exchange, asset liability, management, and risk oversight. Mr. Ayo, please come forward. Next is Mr. Raphael Femi Lewu, a solicitor and advocate of the Federal Republic of Nigeria. He holds an LLM degree from the University of Lagos, Nigeria, with specialization in secure credit transactions and comparative company law. He's also the group CEO of Capital Fields Investment Limited. Please come forward, sir. Unfortunately, Mr. Olugbenga Agbola, co-founder and chief executive officer of Flutterwave, due to work exigencies and sudden appointment, is unable to make it today. He, however, sends his apologies to the MBA. We will take some questions in that regard as a going concern for the fintech market. Okay. A round of applause again for all the panelists. So we go directly into the questions. Let me start with Mr. Raf Lewu. Mr. Lewu, despite government's effort to attract foreign capital through FX liberalization and interest rate hikes, foreign investors withdrew north of 420 billion naira from the Nigerian equities market in Q1 of 2025, a 251% increase from Q1 2024. While we see a jump in foreign investor participation, most are still short-term speculative moves rather than long-term commitments. In your opinion, how can investor appetite be sustained in the capital market?
Can you hear me?
Yes.
All right, yeah, thanks. So the question of investors' appetite actually will also be driven by their, number one, objective of making money. Put simply, every investor wants returns on investment. Now, the enabling environment will inform what investors will do. They're very clever at watching the markets, and then they will read whatever the policy says. What the regulators are telling them, they will have to interpret at every point in time. Now, beside the policies, I talked about the objective. They want to go in at a certain time and come out at a certain time.
And so, bearing whatever it is, they are bound by the dictates of their home offices, for instance, as to what they want to do. Do we want to go in for a long time, or do you want to go in mid-term or short-term? Now, as an investor, you really want to see what that market is saying to you at that point in time. You said what happened in quarter one and quarter two. Now, at the point they went out in quarter two, they, at the point they came in, had at the back of their mind when they wanted to go out. Now, a function of what happens in the market, regulations, will inform what they want to do. If at the point they're going out, they see the enabling environment that says to them, keep the money in the system at that point in time. They want to make more money, and so they will stay and probably roll over the investment. But for any reason, it doesn't look conducive for them at that point in time, they want to go back. Sometimes they want to test the waters and see if you are able to. The acting director mentioned earlier that the confidence level is beginning to grow, and I agree with him, absolutely. Now, having seen the confidence level, what they would typically do is to test waters. For an economy that have suffered the kind of image we suffered when we couldn't repay, you wouldn't expect investors to come in and stay. They want to test to see if you're able to do that. Now, my point is you need to really measure their performance by what they did shortly afterwards. They started coming back because now they believe, look, they brought their money, they were able to take it, and then they can come back. Now, to your question, the point is the government has to give them the enabling environment to enable them to continue to do. Okay. Liquidity has been short. Now we know the transparency is there. With the unification of the exchange rate, that is helping. Now there has to be policy consistency. Once that is there, I bet they will.
Policy consistency.
Yeah.
That's excellent. Do we have contributions from any of the panelists to Mr. Raf's position? One thing is clear, foreign investors are building trust. It is shown by facts that at a time in the capital markets, foreign investors trumped domestic investment by interesting numbers.
That's right.
And that is like, it's never happened before. So do we have any contributions before I go to a second question passed on? None. So I take it that that is a positive sign from the conversations said by Mr. Okay. Foreign investors are building confidence in the Nigerian market, particularly capital markets, and that is a scorecard that takes a green sign. We should be ticking the lines green and red. See how we're progressing. Okay, the second question I will pass to Mr. Adelagun Ayodeji. In March of 2024, the CBN gave a directive that Tier 1 banks like yours increase their capital base by 500 billion, which is approximately $13 million, in its objective to reach a $1 trillion economy by 2030. What is the banking industry's outlook on the recent FX reforms, especially in light of the new CBN capitalization directive? Is it, would you consider that policy one positively to impact the entire economy in itself? Mr. Adelagun.
Press the button.
Thank you, moderator. So to start with, good morning, Leonard Silk. You asked if it's a positive policy direction. I would like to say it's 100% positive. And to speak to that question is to bring to mind a story that was shared with me by one of our RMs. They had advised someone to invest in some hard currency transaction. And this client said, look, I want to see my money in billions of naira. I'm not interested in any hard currency transaction. He wanted to see his multiple zeros, but some years after that period, I'm sure if you asked him, would you have wanted to see less zeros, he will have said yes. So the policy is geared towards making sure the banks in Nigeria are more resilient. It's about globalization. It's about the ability of these banks to weather economic shocks, which we have seen is happening almost on a daily basis, particularly when you have a global economy that is VUCA. Total extreme volatility, unpredictability, and things happening on a daily. So this definitely is a big positive for all Nigerian banks in terms of how we compare globally with other banks. Simply puts us in the global map as a country where the financial institutions are strong enough to facilitate banking transactions and trade in the size that they should be playing with. Thank you.
Thank you, Mr. Adelago. That's 2 scores for the central bank and the policies that have been implemented in 2024. Do we have any corroboration in the room or dissension by chance?
I'll be corroborating this. In addition to what Mr. Aguilago mentioned, this also speaks to the responsibility of the financial service players and operators, I mean the banks, to encourage or probably reestablish the confidence level with the investing public in them, in the sense that where a bank is able to capitalize to meet the demand of CBN, it further shows to them that their banks are solid and are able to take on transactions. Like I said, do we now get called to the table? What the minimum share capital was a couple of years ago, before this period, considering inflation and the exchange rate, will put us nowhere in the Committee of Nations. And so when you have international transactions that require guarantees, for instance, $1 million or $2 million, and if you look at the whole capitalization of a bank in Nigeria, that's nothing. Yes. Now with this, once you're able to comply, banks are beginning to listen to you. Transactions can come to Nigeria, and at least, if nothing, in Africa, we will be one of the top ones to apply that, and that's obviously going to be helpful.
Thank you.
And they have more money, of course, to really channel towards the real sector, besides the real sector we're talking.
Thank you very much. Certainly the capitalization and the objective of the CBN is to see Nigerian banks compete with global banks in general, and of course also manage currency risks as well as liquidity, enhanced liquidity. So that is a step in the right direction, as I hear from the panelists. I would move to another question, and this time, before I come to Mr. Tereba, I would ask this question, and it's directed to Mr. Taiwo. So this, let me ask, okay, let's start with this question. With a switch to digital infrastructure, Mr. Taiwo, you can hear me.
I can hear you.
With a switch to digital infrastructure, what safeguards are in place to ensure that the reformed BDC sector adapts a global anti-money laundering and compliance standard so that Nigeria does not become a vehicle for illicit financial flows, particularly terrorism funding? There was news recently, before I ask you that question so I can elaborate on APCON's plans to handle this, where global terrorism and terrorism funding has become more interesting, and Nigeria has become a target under what you call the dark web. So what they would do is create incentive within local communities where they say government is giving funding to small businesses and local residents. And literally, they would need to register on platforms with their data. This data is extracted for 5,000 naira or thereabouts, sold on the dark web for $30 per individual. So the syndicates would take on that data, buy the data off of the dark web, and use that to infiltrate the banking system, which I would tell you categorically has exposed banks in certain situations to cyber fraud. So with CBN, again, giving digital directives to BDC that have conventionally operated in less digitized framework, how is ABCON looking at dealing with that situation now that there is an uncommon reality that BDCs would have to go digital pretty soon? Mr. Taiwo.
Thank you, panelists, moderator. Thank you, my regulator here present. I'm happy to be sitting in front of you to clarify some issues and to support your reform. And thank you, the Bar Association of Lagos State. I'm from Bureau de Change sector, as rightly announced. And the reform is a welcome development that we totally exonerate us from the generalization of criminalization. Because, you know, we have category of BDCs. But once anything happens in that sector, terrorism financing and all sorts, because we are licensed by central bank, then they will say BDC operators. But by the time you go into the investigation, EFCC, you find that non-licensed operators were practically involved in some terrorism, financing, and all that. So why the digitalization is highly welcome is to differentiate the licensed bureau de change from the unlicensed bureau de change, so that the government and the central bank will know who are they dealing with legally, okay? They will know who they are, how our transactions moves, who we sold to, you know, electronically, immediately it will hit their server, they will know, and we have a checklist of these terrorists. Once you come into our office, once we put your name, if you are one of them, there will be a red flag. And immediately we report to NFIU, right from our office. But it's left for NFIU to follow up with you. And at times, we have challenges with the security outfit, okay? Whereby, once we report, you find out a customer will come and meet you later. So now you go report me.
Whistleblowing.
Because the security outfit, one way or the other, they will even mention your name. It's also BDC that reported you. So it's at risk to us. We have those challenges. And that's why you see we have less patronage, okay, because of the documentation and all that. So once you walk into my office, I ask you some documentation as required by my regulator. You will look at, say, no. You will go and meet Alaji outside, which practically closed down my own business. Okay. But with this, we can sit in the comfort of our office. Whoever wants to trade, let them trade genuinely.
Okay.
And who is not trading, let them go. So
okay,
we can go and rest.
Sir. Because of time, please, a round of applause. I agree that digitization is a welcome development, as you have indicated, and it does appear that a lot of enlightenment would be required. At the same time, high investments in training and digital optimization to match, customer informations against terrorism platforms, to politically exposed persons and sundry. So if the plugins are to many of these regulatory agencies, immediately a person provides his identification, is matched against many of those layers, and you can immediately flag and report. So definitely sensitization would be, and reduction of the BDC numbers to actually create within the market confidence will be a big plus. Thank you very much, Mr. Taiwo, for that response. I would move now to Mr. Ayotareba. A quick question, sir. The electronic foreign exchange matching system, the FMs, is one of a kind in this part of the country. It was introduced in late 2023 to unify and automate FX pricing. Between July 2023 and March 2025, the Naira moved from 750 Naira to $1 to about 1,600 Naira to $1. Do you believe that the FM has helped with price discovery and operational efficiency of our FX market? Mr. Tereba.
Thank you very much, Mr. Moderator. Thank you, MBA Lagos, for the opportunity to participate in this conversation. I would like to do two things, I'd answer your question, but I'd also like to provide some, a broad overview, particularly relating to the useful overview that Mr. Oke had given us about, all that's been happening in this space, all that they had been doing in this space. It described the electronic system as a price discovery mechanism, which is devoid of any human input. So both buyers and sellers could log on and get a sense of what the price is. Now, the direction of travel of the rate has very little to do of the price discovery system, whichever price discovery system. It has more to do with the balance of demand and supply in the market.
Correctly, sir.
And give us several sources of supply shortfall as they were trying to discover price, and they were trying to make the market more transparent, make the market more inclusive, and searching for unification. So the rate had been determined by the fact that demand outweighed supply. And you had that steady fall, in the market from 2023 to more or less till December 2024. It's only since the beginning of 2025 that we've seen some reasonable stability. It was 1,500 at some point. But now it's back to 1,600 after the Donald Trump announcement of 3rd of April this year that put liquidity pressures on markets around the world. And at that time, the central bank also intervened. And that speaks to the volatility, comments that have been made about portfolio investment, whether in stock market or in banks or in government bonds. They are going to come when returns are good enough for them. And they are going to live at the first, sight of any turbulence. So you would imagine that portfolio investors sold out across the world in the wake of the market turmoil that followed Trump's tariff announcement. And CBN intervened. So we didn't see the worst, but we moved from 1.5 to 1.6. And since Trump suspended, the reciprocal tariff thing and markets had stabilized, we've also enjoyed stability in the market. But let me speak, to what, I'm happy that OK has told us about, the relative expectation we should have from trade, given the weakness, for example, of oil price. And he's spoken also about what they are doing with remittances, trying to give incentives to the IMTOs, and they have a monthly target of $1 billion from that effort. Yeah. Although Nigeria's remittance peak was about $24 billion. So if their own $12 billion a year is an additional thing, it would be great. But the point I want to make, and I'll make it very briefly, is that while I commend what the central bank has done, and I would like to acknowledge, an aspect which I didn't mention, but it's quite important, that we traveled since 2023 to the end of 2024, maintaining a market-determined rate, pursuing unification, which we achieved, but at the cost of weakened exchange rate, because our reserves position was low. We didn't have adequate levels of reserves. When the government took over in 2023, they met less than 4 billion in net reserves. And it was at the turn of 2025 that they are now able to announce that net reserves had risen to about 24 billion around February or so. That is eminently commendable. The current stability in the market is owing to the fact that our reserves level in net reserves terms, not gross reserves, is now a bit more adequate. And the battle to fight to ensure stability going forward is to ensure that those levels of reserves are adequate, even continue to be adequate or even become more adequate in the face of weakness in exports.
Okay, that leads me to the next question, which I'll open up to everyone. Of course, the conversations around how to do that would only come from non-oil exports. That is a matter of factly.
Can I?
Yes, I'm going into the question, then we could open it up to everyone.
Okay,
yeah?
Okay. Have you finished?
No, I'm about to ask the question.
Go on, please. Yeah,
I said non-oil exports totaled about 1.79 billion between January to March 2025, a 24.75 increase from the same period in 2024, right? So there is significant improvement in non-oil exports even as at now. However, inflation stood at about 33.2% in April of 2025. This is from the Nigerian Bureau of Statistics. And reserves remain under pressure. Would you then consider these growth numbers impactful or marginal? And I'll open it to the floor. Mr. Adelagun, do you want to comment to it before Mr. Ayo gives?
Thank you. Non-oil exports is definitely a welcome development. The more positives we see from that angle, the better positioned we'll be as an economy. But more importantly for me is the fact that crude oil production is also ramping up. And we're seeing quite some investment coming into that space, a lot of reforms happening there. what that tends to do is help us to build organic source of dollars, in which case we continue to see the countries being able to generate its own dollars. It helps to build reserves, and we can say this money is going to be a constant, and there's a lot of transparency around that. But having said that, the previous question also centered around the electronic foreign exchange trading system. For price discovery, it's been excellent and continues to help the direction of the market. But wherever the prices are today, it's a function of the various positive things that the central bank has been able to do over the past 2 years. And that, I say, has been very commendable. And the market is the better for it since all of these reforms have started. Thank you.
Thank you. Mr. Terpa, do you want to comment too?
Yes, thank you
So
very
the
much.
strategies around, do you agree that the way forward is to create incentivization for non-oil exports to grow our reserves? Mr. Adelego has said that more investments are coming from crude oil and that we have the ability to generate our own dollars doing that. There is a common saying, I do not know whether we've heard it and whether you agree with it. They say a country is so poor, all it has is oil. So this conversation and narrating it down to the conversations around oil exports, non-oil exports, what do you think would be the rippling effect to help with the strengthening of the reserves, which you have indicated as the long goal, or possibly the long goal of the central bank, should be the long goal of the central bank?
Thank you very much. While not disagreeing with the fact that you should get what you can get from non-oil exports, you should get whatever you can get from oil sector. Do not limit your options. Nigeria's options are not limited to exports. Nigeria's options are not limited to non-oil exports. The Nigerian options are not limited to oil. Whoever is suggesting that Nigeria is poor in everything else except oil needs to be educated. That Nigeria is richer in many other sectors than it is in oil. Unfortunately, we don't recognize the riches in those sectors. We don't recognize those potentials. And I would like to, identify some of them. So the world has moved away from you trying to tie your reserves to exports. Exports, we are in an age where export has stagnated and is declining. And we continue to decline. So, and the weakness in the commodity prices have been with us since 2014, 2015. The medium to long-term prospects are even dimmer for commodities, be it oil or non-oil, given that many of them are being displaced by intangible services. Solar, for example, displacing fossil fuel. And digital services displacing tangible products, in every sector that you can think about. Things are moving on to the internet and products are becoming dematerialized. So don't tie Nigeria's future to exports, right? Tie it rather to the investment opportunities in those sectors that are displacing the sectors that are benefiting from the energy transition, the sectors that are benefiting from the digital transition. And Nigeria, the president and his team should be commended, for what they are doing, not just in the energy sectors, whether the PMS or electricity or gas, but they should move beyond price and complement it with quantity reforms. The reorganization of the NNPC recently raises the hope that someday those refineries will also work and complement Dangote. But the biggest is what the president is doing, what he calls the legacy projects. trying to connect the nook and crannies of Nigeria with roads. Although we should encourage the president to fill two gaps in that effort. And he should emphasize rail more than road, particularly integrated rail that includes power transmission, pipelines, fiber optics, and the rest of it. Then two, he should not fund it with debt. Government doesn't have the money to fund it through procurement. It should fund it the way we funded telecoms, the way we funded LNG, with equity. If equity comes into the market, equity is the only source where you can get $100 billion. You can get 200 billion rather than trying to borrow 20 billion that is going to compound our problems. So those conversations, and then when you say remittances, don't leave it open-ended. In which of these sectors can the diaspora be encouraged to come and take, like we've said, we don't have money to invest in the national carrier. Why not say diaspora should come and invest in it? Issue a diaspora bond to that effect. Or the terminals, the petrol terminals, or the rail, So let's offer investment opportunities in sectors that are bound to thrive. If we have 200 million lines in telecoms, imagine what's going to happen if rail works across Nigeria. In terms of the number of people you will be carrying, in terms of the quantum of cargo that you'll be carrying. And these are all domestic. You don't have to export it. And it's going to lift the economy the way telecoms lifted the economy. If power transmission, if you can get investors to expand power transmission and everybody who need energy, light gets light, the way we solve telecoms, you can imagine the amount of things we would unlock. But you need foreign investment, FDI, not foreign portfolio investment.
Thank you.
In a nutshell, yeah. Thank you.
Thank you very much for your response. Very quickly to my next question. We want to make sure that we are apt with time. This is to Mr. Raf Lewu, and it's more in correspondence to the conversations around what Mr. Ayoteripa has raised in terms of remittances in general. So I'll give you the numbers. The Central Bank of Nigeria reported that diaspora remittances through IMTO operators totaled about 4.22 billion from January to October 2024, almost doubling the 2.62 billion recorded in the corresponding year. This is another scorecard for the CBN. Can we give them a round of applause? More so, diaspora remittances hit 20.98 billion in 2024, a 9% increase from the previous year. Though the real issue, as Mr. Ayoteripa has indicated, is that these funds aren't channeled into the equities market. What role do you think the capital market can play in stabilizing these FX inflows into its market? More importantly, the regulator has indicated that it has created rippling policies to engender economic growth, but it is up to the market to receive these policy incentives. Where do you think the capital markets can deliver value here?
Thank you. I think it starts first with collaboration amongst operators. They need to continue to stay close to the regulators to see what they're talking to them about. And the first thing to my mind would be for them to come up with initiatives that will encourage particularly foreign portfolio investors to stay, and then they can guide where they should be. There are derivatives that they can encourage to happen. Forward contracts, luckily we have those FX options, opportunities we can harness to encourage diaspora funding in particular to come. If you look at FPIs, that's one point. For that, we can have issues like diaspora bonds, and then come up with sectors that you know will be very interesting and attractive to them. Number one, security is one thing everybody wants to talk about. And when you know that there is enabling environment and regulations or framework that will help give that confidence level to the investors, both FPIs or diaspora investors, they will come for it. Liquidity and transparency, those two factors are very key. Once they know that, number one, the process is transparent, they have a buy-in. Secondly, the confidence level is also further drawn that if it's liquid enough, you can go in and out at any point you want. It helps for people to do that. Now, we're lucky that platforms like FMDQ, they have platforms that can encourage for those derivatives to be traded. So there has to be collaboration for both the operators, regulators, and then create the enabling environment for the investors to continue to come into play in that area. It sure will help.
Okay, thank you very much. Do you have any contributions or dissents to that position? So it's, as Mr. Lewu said, it's to build more policies, clearer policies, and engender trust within the market. These are certain ripples that could be adopted in this regard. It's quite interesting that I visited Barbados at a particular time, and they designed what you call an incentive policies with foreign investments within Barbados. So if you are an investor and you retain 60% of your earnings within the country, you get incentivized by up to, if I recall, 60% if you meet a particular threshold. And that incentive, by reason of, has kept a significant amount of foreign investments within the country. The second, I would say, and this is a question open to everyone and any of the panelists can take it. We have consistently said that the ease of moving funds in and out of the country is an incentive for most investors, particularly investors who have very limited trust in an economy. We see that funds come in, but they go out almost in proportionate value with investors. They short sell. Is this, you have indicated, may be an indication of still testing the waters to see whether policies will remain consistent or otherwise. But for a long-term objective, do you see the continued allowance of inflow and outflow of funds with ease without any frameworks put in place? Of course, there are frameworks, but without any incentive modules to keep it in. Would you see that that would help us? Or more importantly, should we be looking at, or should the regulator be looking at incentives that will engender and encourage investors to come in? What type of incentives will you suggest in that regard? And it's open to the floor, please.
Okay. You go first. I'll speak to that later.
Can I say something,
Yes,
sir?
sir. Please go ahead.
Thank you. There's no other incentive when you know that your money is safe in your country and the value is there. Okay? You can see inflow now. It's because the exchange rate is stabilized. Unlike we in our sector, a customer will walk in and he will tell you that Aboki FS rate is this. If you check it now, all those things are stopped. You will see uniform rate. The challenges we have before is because the old CBN are defending Naira. They bring money, they want to defend Naira. You didn't let Naira stay at the normal position, but in their own wisdom, the current CBN, they let it stay in the normal position to give confidence to investors to be able to come and invest. It's enough incentive.
A round of applause. You can clap if you want. Mr. Adelagu, coming to you, sir.
Thank
1
you.
minute. Because of time, we need to be quick about this. 1 minute.
So it is clear we can't afford to be a closed economy. We have to remain open. People must be able to come in and exit when they want to. But to understand what needs to be done is to look at it from the standpoint of the classes of investors. So you will have people who are tourists, and like a tourist will go to any place and leave maybe in 1 or 2 weeks or 1 month. But you will also have people who will be permanent residents, people who understand the country, who have invested in the country, who have things working for them, that country. So we will continue to have these people, those who will come and test it and leave. But in that same space, you have people who have come in very decent size and continue to take a big stake in the economy, and they're here for the long term. So the more we are able to sustain the stability, the transparency, the ease of doing business, the various support systems that we have seen put in place, particularly by this administration, definitely the way to go. The economy must remain open for people to come and go out when they want to.
Thank you. Mr. Leo.
Okay, so in addition to what Mr. Adilagun just mentioned, with particular reference to operators, IMTOs, for instance, I know as at the moment, the CBN will only allow IMTOs for inward remittances, but they're not allowed to participate in the outward. And whereas this is the same set of people that have brought in 4-point-something billion, you can imagine the set of clients and customers that they have. If those clients do not have the same opportunity to use the same channel to get their funds out when they need such, there is a displacement or distortion somewhere. I'm glad, again, kudos to the central bank. This current regime in central bank, they listen and they consult. I was at a session where the CBN organized this, and I'm told they're considering giving IMTOs the opportunity for outward remittances as well. This will further enhance that free movement of funds that we're talking about.
Thank you,
if
sir.
that is done,
I'm
it will
going to
help.
have to shorten so that Q&As can come in. Mr. Tereba, could you give
closing
on that?
One missing element in Nigeria's investment search is investment opportunity. Most of the conversation out there, incentives and all that, is directed at people, private investors who want to take private opportunities. The biggest absorptive capacity for investment in Nigeria right now rests in infrastructure. And when we offered opportunity for investors to come into the GSM space, they came. When we offered opportunity for them to come into LNG, they came. What is the next opportunity that Nigeria is offering? If you go to Saudi Arabia's website, you see 200 opportunities across 17 sectors. You go to invest in their site, you see 15,000 opportunities. And they get investment every week, every day they publish it. So Nigerian government should put a list out there. Where do you want to offer investors long-term, large-scale investment opportunity in rail, in power transmission, in aviation, whether it's the terminals or the national carrier, and then where the carcass is, the vulture will gather. The investors are willing, but the opportunities are not visible. Government still want to fund everything directly by itself through debt. We need to state what we want to seek equity investment from. The day we put that list out, our investment narrative will change for the better.
Thank you, sir. Before we go into Q&A session, because we have 11 more minutes and we must give the audience the opportunity to lend their voices, this is a food for thought for all. We have consistently spoken about foreign investments into the economy, but very little has been spoken about domestic participation. The fact that we seem to have this idealist approach that only foreigners will come to save us, and we have not considered very deeply how we can save ourselves from everyone in this room who has the ability to innovate, who has the ability to invent, who has the ability to create, you do have a mandate to give the best of your skills. Those skills, if well delivered, are exported, and foreign exchange can come through that. So, as we continue to point, as they say, when you point one finger at your opponent, certain fingers point back at you. There is a winning domestic participation in funding infrastructure. There is winning domestic participation in contributing to the growth of the economy. So, as we go into the questions, I want to ask you that before you throw a stone, consider what value you are giving to the conversation. Let the Q&As begin. One from each segment. If you have questions, please raise your hand. Mr. Osaro, SCN, will have a question. Please, Mr. Osaro, please make sure you indicate who the question is directed towards, and if it's a question or an observation.
All right. My question is directed to Bisoye Koka. And it's a combination of two things. It's an observation, and I think what you're saying to us that we must provide solutions. So you asked the first question, that how do we connect the capital markets, and I would say to the banking sector, although you asked it a bit more broadly. How do you connect the capital market to the economy? Because the banks will be funding the real economy come next year. And there are simple ways to do it, a bit more complex, because we're now adopting, and okay is here, I'm happy he's gone to the central bank, he's my good friend. We're now adopting what is called the latest regulatory framework around the world, okay? So most banks, when they give out a loan today or next year, will not keep that loan on their balance sheet till conclusion. They are likely to trade that loan. So if you are funding the infrastructure, the highway road between Lagos and Calabar, for example, and you've taken a loan of close to, I don't know, you've given out infrastructure finance, infrastructure advanced to a construction company, you're not going to keep that loan on your balance sheet for 20 years. If the road is going to toll finance itself, you're going to sell it, maybe to an investor. So the tools by which you connect the capital markets to banking, it's currently available, but the capacity to understand securitization is quite weak. And so the central bank needs to be doing quite a lot along with the bankers, the operators, and the regulators. That's the first point on the solution. So the law is there, quite complicated. The regulation is there because we are adopting international regulation, but the capacity is weak. The second point I'd like to make is the point relating to BDCs and the central bank. And this is for you, Koka. In this panel, I wanted to see a technological experts. And the reason is this. We're moving to digitize the BDC framework. And the central bank is trying to achieve a number of things. They're trying to achieve arbitrage, eliminate illicit trade, understand behavior. So you need an AI to be introduced into that system, clearly. And if you're thinking about digitization itself, you're only transforming from manual to digital. It doesn't actually do anything. That's the interesting point. But what I heard you say, San, I'd like to talk to you when we finish, because I have been asking all my colleagues that we must engage technology in everything we do.
And that's Silk.
So,
one more minute.
1 second. Why didn't you have a technological expert on this panel? That's all I'll ask. Thank you.
Thank you. I did have one, Unfortunately, he was unavoidably absent because of work exigencies. Menga Agbola of Flutterwave ought to have been in the audience. But more importantly, as a digital expert myself, the understanding around the future of FX going digital isn't a new conversation. My business had built a digital framework for payments as far back as 2018. A little early for the market, but that indeed was seen as the future of payments. And that, so the CBN's directive as of this time is a timely one, but it is many years due. So that's one. The second, as to the tying of, again, Leonard Silk, I'm a moderator here, not a panelist, so I shouldn't be answering the questions. I will have those discussions, the second discussion with you off of here so we could give window to other conversationists. Okay, the panel chair has raised his hand. He's given...
You just use the mic.
You have the mic right over there, sir.
No. This.
Oh, there's one right here.
Okay, I would respond to San very quickly. The introduction of AI is very important, and we agree that that is necessary, but AI works best where the information is already digital. So the first step is to move it from paper to digital. But something else that's very important that I would like to address is, especially regarding BDCs, there's this major misconception that we need to address. BDCs are licensed operators to sell and buy foreign exchange. That's it. And they give their reports to the central bank. The people who stand on the road, we often refer to them as BDCs. They are not BDCs. So there are those who are unlicensed, and you refer to that, and they do a lot of funny things. They are unlicensed. They are operating illegally. This is a law forum, so I can say that. Then you have the licensed ones who are operating outside their mandate. So they are licensed, but they are not allowed to do transfers, for example, and they do transfers. So they have a license, but they are operating outside their license. So what is going to happen is the central bank introducing the technology behind this so that all the reporting is technological and you can appraise it. It means that if anything is not reported, then you are definitely operating illegally, whether you are licensed or not. Everything that is reported can then be appraised, digitized properly, and then regulated properly. So that's the first step. In terms of getting the AI involved, that will be the phase after the digitization is successful.
Thank you very much, Ziola Erikawe. Do we have other questions from the room? You want to give a response, sir? To him? Okay, Mr. Erikawe, Mr. Taiwo would like to have a brief discussion with you after the session, so he can give you a clear response. Do we have other questions from anyone in the room? Okay, before we come to a close, I have a question for Mr. Okay. And the question is very clear. We're at the MBA conference, and behind you are legal practitioners and professionals who provide legal services in-house as well as in the courts. FX may seem vague in conversations other than they wake up, they find rates move up and down, and they say, oh, the economy is rippling negative. What do you think, or where do you think lawyers and the legal profession come in the overall overview of the NBA, of the CBN?
you very much. Very good question for a conference like this. The fact is that we have a long way to go in our financial markets, a very long way. The Leonard Silk here was talking about securitization. We actually worked together on that with a lot of other people many years ago. Like he said, the regulations are there, things are there, but nothing is happening in that direction. Lawyers are part of structuring financial products. That's the thing. Lawyers are part of structuring financial products. You can't structure financial products without the legal aspects of it. And that's why we're encouraging lawyers to look at certain aspects of finance, you know, get some technical skills in those areas. That's number one. When you asked your question, you talked about FX. The thing is that our market is much, much, much bigger than FX. Okay, so right now, that's why I said Nigerians are fixated on the currency. Even when you come to the market, a lot of the treasurers and all that, they are talking about FX. But we have derivatives, which the member of the panel here talked about. And we're, opening up avenues. We're opening up, capacity for the market to create derivatives products, for risk management, for investment. So there are so many things that we don't have in our market presently that we can bring into our market. And lawyers are part of those things. You can even compare our market to the South African market, for instance. They are way, 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 way ahead of us. So someone needs to interpret the laws and, apply it to the financial instruments that the finance experts are building. Someone needs to advise. And now we are regulators. Regulators are about compliance. Lawyers are involved in compliance. So there's so much to do. It's just that people really need to say, okay, this is the area I want to, pay some attention to, like the Leonard Silk here has done, So there's a lot the MBA can do in, keying into what is going on in the financial system.
Thank you very much, sir. A round of applause. Indeed, from Mr. Okay's comments, there is indeed a lot that the NBA can do in participating with the central bank in meeting its objectives. The central bank is a policy-driven institution, and indeed, most policies are drawn up or reviewed by lawyers. Indeed, it is time for us to dig more into these policies, read them because we are very much affected by the policies. I do believe that the central bank does have an open communication channel. Should you have suggestions when reviewing policies to see how these policies or how inclusion from the area of the NBA can also be factored. We will also drive this as an initiative to ensure that lawyers, as well as technocrats, as well as contributors in general, are able to pass on their opinions to the central bank when policies are being designed or drafted. So I will end this by putting up our key takeaways. If you agree with me, panelists, please let me know. If you do not agree, you are open to also dissent. Even though I'm the moderator and I can cut off the time, I would allow this happen. The first is that capital flight has reduced. Yay or nay? Mr. Lidag, you are not shaking.
100% yes.
Capital flight has reduced. Yes. A round of applause for the central bank policies in seeing this happening.
I must quickly add that that's a measure of the confidence level, of course.
Fantastic. The second is that even though speculation still exists, which is possibly driven by renewed trust, you would find investments come in and they keep checking the markets for stability due to past precedents, there is still an intention, or there is still work to see strategic ways to retention of these investments to happen. Yay or nay?
Yes, absolutely.
Another round of applause for the central bank. Sadly, we see domestic participation waning. Yay or nay?
Yet again, yes.
Mr. Delagun, you are onshore. You are in the banking sector. How do you see domestic participation in the market at this time? Are you saying it is increasing or decreasing?
In all honesty, I think from where we sit, there's actually maybe fair, equal distribution of foreign investors and local domestic investors in the space. So there's increased awareness and people are getting more into doing several things that they're doing. So I wouldn't say it is waning. It's stable and beginning to increase. It's my view. Thanks.
By facts, domestic transactions dipped by 11% in March. So there has been a wane in domestic participation, possibly due to inflation and other extraneous factors, but we're seeing it ripple
so we
in the
can
market
look at that data after this.
Yes, very well so. I will furnish you with the data information. And of course, do we agree that work also still needs to be done with the macroeconomic pressure? There is still heightened inflation. The policies are in the right direction, but we still need to look at rising inflation. Yay or nay?
Yes, absolutely.
Thank you. I think the end of this session is directed to the policymakers. We thank you for the work that you are doing at the central bank. Mr. Okay, please do send our highest regards to the DG Economic Policy, Malam Sani Abdullahi, and please do inform him that we have given the central bank a good scorecard today, but we still implore the CBN and other regulators like SEC to restore FX stability and to anchor investor expectations positively, to implement credible inflation control measures. We're all affected by the high rate of inflation and it's still rippling their market, and to increase policy transparency. That is very essential. So we are very pleased that you have taken time to come here and give clarity to CBN's policies. We also implore that more open, visible windows of communication and contributions from the general public in entirety are seen. Policies aren't made in silos. They are made for people, and these people need as much of an opportunity and a fora to be able to lend their voices. Thank you to all my panelists and to everyone who has taken time out to join this FX policy dialogue. And indeed, we will see you soon again. Thank you very much.
In recognition of your contribution as a panelist, thank you very much. You know, what this entails is that law does not exist in an island of its own. It interacts with economics, politics, the environment. Law is the foundation of everything, and you've demonstrated that by the panel you brought in here, and I'm hoping that lawyers will begin to see that. Thank you very much for your contribution. Thank you. Thank you. Ayodeji Adelagun. So I've called it the other way. It's written differently here. But thank you very much. And I say the same thing that I said earlier on. Thank you for helping us understand the way law operates. I believe that law operates with in the presence of other disciplines. It doesn't exist in its own. Thank you very much. Thank you. Thank you. All right, this is a representative, correct? Okay, this is for Alhaji Aminu Gwadabe, right? But you did exceptionally well, sir, in coming to represent him. And in fact, I think the CBN will recognize that those who operate with licenses, and I was being told already that sometimes licenses, sometimes people would engage in activities that go beyond the license. But the important part is that this is a business where, you know, the fact is you might do a lot more than those who are actually unlicensed. And therefore, hoping that the CBN will get more involved with people like yourselves. I saw the pain that you exhibited. Thank you very much, sir. Thank you. Thank you, sir. And give our regards to Alhaji. Thank you. Hello, sir. You know, I decided to give you this. I haven't distributed the earlier ones because I read many of your papers long before I started engaging with economics, and I thought that this is an opportunity for me to thank you for all you do, all your contributions. I know your views deeply on economic issues, and when I saw your name today, I was very impressed. Thank you for bringing Dr. Ayo Toribe. Thank you, sir. Thank you very much. Thank you, sir. Thank you. I'll just drop this here for now. Thank you, sir. Thank you. Yes, sir. Okay. Yes, sir. Finally, we leave the last for our regulators. You know, when you're an operator, I'm not an operator, but I work with many operators. I work with the CBN. So, you know, we must give them the greatest respect. And the fact that you're responding to these invites is commendation, because we had a time where we'll send invites and we will not even get response. And it's even more important to remind ourselves that law does not exist in a stream. Everyone outside the legal profession, everyone who practices anything outside law needs law for its sustenance and continuity. So thank you very much, sir, for coming. And yes. I think, okay, I know him for a long time. He's a very athletic gentleman. So I think you can come in. Yes. Thank you. This is for, yes. This is for Alhaji Mohammed Sani Abdullahi. And thank you very much for responding. Give him our regards. And give the governor our regards as well. Tell him all the good things we said about him. And make sure you do. Thank you. Thank you. And I have to thank our moderator for bringing this panel together. Thank you very much.